The war in Ukraine has changed the world. And now we need to think about where this world is moving to, together. That's why MIM Business School is launching the nationwide educational project Reinforce UA, where the world's greatest minds will share their ideas and insights. And you will get their experience, change your perspective, and discover what changes should the business be ready for, before and after the victory. Every week on reinforceua.com.
Let's start. Ladies and gentlemen, I am Oksana Kukuruza, and it is my pleasure on behalf of International Management Institute MIM Kyiv to welcome you at the Reinforce UA. MIM Kyiv project, where prominent nowadays intellectual share their knowledge with Ukrainians and strive to help us lay the foundation for building Ukraine after the victory. Thank you for your support. Today's event is a special one. We are having it regardless of the complete blackout in Kyiv and other cities and towns in our country. However, we are confident in our future. Join us, and thank you all those who joined us regardless of all the difficulties. This project was made possible due to the support from Bogdan Family Foundation, 50 Thinkers Organization, and 3 global associations of management education, AACSB, AMBA, and EFMD. We thank all our benefactors who have made donations while registering at our platform. Please be aware that any additional donations can be done at any time at the reinforceua.com webpage. The raised funds will be allocated to the support of temporarily displaced Ukrainian women who want to launch their own businesses. Before I give a floor to our honorable guest today, I would like to remind you that you can ask questions by clicking Q&A button on the toolbar down the screen. Please do not use chat for this purpose. Today's session will be recorded and become available at the Reinforce UA website afterwards. Without any further ado, I give floor to Christian Rangen, one of the Europe's top strategy and innovation authorities, a keynote speaker, business school faculty member, and workshop facilitator. He is also a designer of strategy tools. He advises to large companies and governments from across the globe and provide on innovative strategic transformation, innovation strategies, business model innovation, and creative leadership development. His colleague, Nur Milamud, who is a global startup coach supporting startups in fundraising and strategy, and also member of numerous boards, investor and faculty member, will join us as well. Without further ado, I give floor to Christian. The floor is yours.
Thank you very much, and thank you for this kind invitation. It is always a pleasure to get a chance to connect with a new audience. So good afternoon and good evening, everyone. My name is Chris. I'm joining you from the west coast of Norway, and I'm going to be talking about startups and scale-ups fundraising. And the big idea that we're going to be discussing is the importance of entrepreneurship. And I know that the Ukraine has very deep technical talent. You have a lot of very skilled software people, and I hope to see many, many, many more companies emerging out of Ukraine. And of course, those companies will grow to be big, successful, and create a lot of wealth. But to get there, we need funding. And I'm going to share my screen here, and I'm going to walk you through what we call a funding journey. So this is really relevant for those of you that are thinking about starting your own business. You are maybe tinkering or practicing or doing some early stage work. Maybe you have recently started. Maybe you are doing a pre-seed or angel round. Maybe you are scaling up to an A series or even a B series. Well, this is going to be really relevant for you. And if everything works out, I'll do the first part, and then my good friend Nir will be doing a practical example of what this looks like in practice. Now, I'm very happy to take any questions, so please use the Q&A for any questions, any comments along the way. And of course, everything that we share, we will also make sure we send out to you afterwards. So if you see something, you go like, oh, that moved too fast, or I want to take a closer look, we'll make sure that it arrives in your inbox. Now, background for what I'm going to be showing you, and just to check, you should be able to see my screen right now. Yes, good. So the background for what I'm going to be showing you is I've been doing early stage investments for about 15, almost 20 years. I have invested in well over 100 companies. I've invested into well over 30, 35 venture funds. But I've seen a lot of startup founders getting it wrong. And I've seen a lot of technical founders getting it wrong. And I've seen a lot of companies that really were good companies, but they were not good at raising funding. And out of this, we sort of said, there has to be a process, there has to be a plan, there has to be a structure that we can apply. And that structure is what I'm going to be sharing with you today. Now, we're going to start here. So I'm going to zoom in. And I don't know if you guys are able to access this, but I am going to put the link in. Let's see if this works. I'm going to put there we go. I'm going to put the link in the chat. So if any of you want to jump in and follow directly, you can use the link, but you can also just sit back, have coffee, tea, or watch my presentation. So what we've created here is basically a fundraising journey. It is a structure that anyone can access, and you can work through this independently. You can work through this with your team. You can work through this with your co-founders, with your board, with an accelerator, an incubator, a VC fund. Anyone can sort of use this, this practice. And what we've laid out, as you're going to see, is really a step-by-step process that is quite easy to understand, but it does require a lot of work. And we're going to show you what that means in practice. Now, the starting point here is, who are you as a founder? So if I was sitting sort of face-to-face with you guys, we would be discussing a couple of things. First of all, what is your existing expertise or existing level of expertise? Now, stealing some inspiration from my kids, we have two categories. The first category, that is a complete noob. And my kid says that's not good. When they call me a noob, I know that I'm messing things up. Now, the noob in fundraising is typically a first-time fund, first-time startup or first-time funder. It's typically someone who is building a company with a very technical focus or technical expertise, maybe not so much on the commercial side. And a couple of things that he or she says is, with regards to capital strategy, which is the first item, they say, well, Chris, we need money. So someone should invest in us because we need money. I have bills to pay. I have cloud subscriptions to pay. I have my team to pay. Somebody give us money. We need money. It's not ideal. When we ask, well, how many investor prospects do you have? Do you have an investor CRM in place? They go like, yeah, we have some names, typically local investors, small business angels, etc. And then finally, when I ask them, so what do you know about the capital landscape? They go like, well, we see that other companies, whether it's Bird or WeWork or Coinbase, we see other companies raise money, so of course we should raise money as well. And the knowledge is really shallow. But people are learning, so that's fine. Now that's the noob, and that is a very difficult proposition to raise funding on. But if we go down to the pro, and this is where my kids say, Dad, you're a pro. Now the pro is probably a serial entrepreneur. He or she have probably built companies in the past, have probably raised money in the past, maybe built and exited several companies. So when it comes to this funding journey, he or she really knows what it takes. So the first step here is, well, what is your capital strategy? Basically, what is your long-term plan for raising money? They will say something like, Chris, we have a 5-step long-term capital strategy. We're going to raise a pre-seed. We're going to do a seed. We're going to do a seed extension. We're going to do an A series and a B series. And they've mapped this out with numbers, valuations, raises, KPIs, and milestones. And they've also already identified who are the different lead investors that they want for each of those rounds. And you talk to them like, oh my God, you guys, you have a plan. It's just really beautiful when that plan sort of comes together. And it's not because, they've been practicing for so long. It's that this is what it takes. This is what you need to do. And when you talk to them about the investor prospects, so who are your investor prospects? Tell me about your investor prospects. They will say something like, Chris, we've been mapping out, researching and analyzing well over 1,000 investors in our space. It's a big number, but it's not that big. And then we've developed a short list with 100, and we have a top list of 30. So you basically have a funnel where you have up to 1,000 on top, and you work through and you segment down. And out of that, we have 30 investors that we want to work with, and we're going to invite into our funding round. And then finally, when you have what we call the capital landscape, these guys have mapped out, analyzed fundraising journeys for more than 30 companies, and they have a very deep understanding of what are other companies doing, what are the other valuations. And it doesn't have to be companies in your home market. It can be similar companies or comparable companies that are in different parts of the world. For example, one company I'm working with today, they are based in Denmark, but the comparable companies are in the US and in India. So these are the pros. Now, based on that, we said, well, is there a shortcut? Like, can we raise money really quickly? Is there something quick and easy? Or we're running out of cash, we need cash next week. Well, in that case, you can sort of jump down here. And then if you're running out of cash, you can do like, okay, how much money do you need? So we are raising, for example, I'm going to say we're raising 100,000. And we have a pre-money valuation of, I'm just going to say 900,000. And we can say how you see on a 1 to 5 scale, sorry, 1 to 10 scale, we can say this is a 5. So 5 out of 10, it's pretty easy. And then in terms of what are the investor prospects that we have, so this is what we call your funding plan. You can then say, well, in our home city, in our country, in our neighboring countries, etc., we can map out the different investors that we have sort of available. Now, this looks really easy, but in reality, it's not that easy. And this is why we introduced what we call the funding journey. And the funding journey, I'm going to go through this sort of step by step. The funding journey is really the playbook for what do you need to do to raise funding. And for a lot of founders that look at this the first time, it looks scary. But then once you break it down, it's actually very, very logical and it's very intuitive. So the first step that you see here is what we call the mapping. And the mapping, ideally, and I say ideally because it never does in practice, but the mapping really starts 1 to 2 years before you need the money. So if you need money in January, you start 1 or 2 years before. It never happens. Most companies are like, we need money in 3 months or 6 months. But what you spend time on here is you want to map out industry trends, potential investors. You want to analyze comparable companies, and you want to make sure that you understand what does your funding landscape look like. Now, a lot of that information is available on databases like Dealroom and PitchBook and Crunchbase and CB Insights and many, 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 many others. So the information is out there, but you got to go find it. Then we have the second stage, preparation. And this is where you develop your scale-up strategy, your capital strategy. This is where you do relationship building with a lot of potential investors. So you go and you build relationships before you need them. And this is also where you develop your potential lead investor candidates. So now you've basically done your mapping, you've done your preparation, and then you get into your actual materials. Now, materials is, okay, who's on your team? What is your story? Executive summary. You need a pitch deck. I'm going to circle that right here. But actually, you don't need one pitch deck. You need multiple different pitch decks. But I'm going to come back to that. You need your data room and a few more things. Now, once you've sort of done those materials, you then start the actual fundraising process. And the actual fundraising process should be very, very high number of meetings, like high activity. I'm going to talk about 25 meetings per week a little bit later. And you need to really sort of have a high speed going into this. So you get what we call this momentum, and you get interest, and you can close it out relatively quickly. I'm also going to talk about that you always should be pursuing 5 term sheets, which is like double Olympic gold in fundraising, but that's what it takes to be among the good ones. Now, once you do this, hopefully you'll run this process in 1 to 3 months, 1 to 4 months maybe, and then you get to your closing. So you got to sign the legal documents, you have some general assemblies to close out, get all the signatures, get the money paid in, don't forget to get paid. And then immediately, and this is really important, immediately you now go prepare for the next round, because once you have fundraising momentum, you got to go back and you start over again. So a lot of founders go like, oh yeah, we have the money, now we don't need, we have 24 months of runway. And they take a break for 18 months. And when they go back again, it's like, oh, I got to start over. So make sure that you have a much higher frequency, which means we recommend startups for raising money every 6 to 9 months. Very active, very frequent, but you're doing boom, 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 boom. But prepare for the next round is now you go back and you start again. So that's the high level journey. Now, if we dig in a little bit, I'm going to go into just a few of these. What we've done below here, and of course we have this for you in PowerPoint format, but it's a little bit easier to see it once it's laid out like this. What we have here is a number of different canvases and exercises that you want to work through as you're doing this. So here you can dive into landscape map, investor mapping, building your investor CRM system, all on the mapping side. You can go into your strategy and your capital strategy, and you can go in through a lot of different things that can sort of help you step by step. I want to zoom into 2, just high level here. So one that we really, really recommend startups, especially first-time founders, to work with is what we call the rocket ship canvas. And the rocket ship canvas is a pretty simple 3-step. It's basically, where are you and where are you going? So here you would say, we are currently, I'm just going to say, we are at the seed stage, then we're getting into early growth stage, and then we're getting into the early scaling stage. And you have, basic information you got to put together. Now, more advanced founders, they really nail it with what we call the Starship canvas. So this is kind of inspired by Elon Musk's and SpaceX, where you have the Starship and the rocket ship. But here we have, as you can see, problem solution fit, vision founders fit, product market fit, business model fit, where you have a repeatable sale, you have good margins, and you can just really validate the business. And then we have the customer creation, which is really about customer acquisition and growth. And as you can see, you dig in here, we have targets, must win, revenue, capital milestone, valuation, et cetera, et cetera, et cetera. There's a lot of details when you dig into some of these. Now, the next I want to show you is, we're going to go over to what we call the 5 pitch decks. I'm going to come back to this a little bit later. But basically, we recommend every founder to be creating 5 different pitch decks. It sounds like a lot, but they're different. All right, so we have a question here. I'm gonna post that link again. So I posted the link into the chat, and all of you should be able to see it, but maybe some of you are not. Let me see. I'm gonna try to. Oops. There we go. So I replied your question with a link, so you should be able to find the link and you can jump in yourself. And of course, we'll send this out to you guys afterwards. Now, with the 5 pitch decks, you have what we call an executive summary. That's a 1-pager. You have a short deck that is for pitching on stage, so going to an event. You have your short deck for meetings. So this is the introduction meeting deck. Again, keeping it really short, 4 to 6 slides. You have the introduction deck, which is a standalone 10 to 16 slides. And you have your long deck, which is easily up to 100 plus slides. So well over 100 slides is very common. And this is built, of course, on the same information, but they're different decks. And when we show this to founders, they go like, wow, are we supposed to make all of these? And the answer is yes, because they're different decks. So what you're going to find here is that we've laid out what does an executive summary look like. So here we have a sort of quick example. What does a short pitch deck look like? And you don't have to use all these, but these are like suggestions and recommendations. What does a meeting deck look like? What does a introduction deck look like? Etc., etc., etc. So I'm going to come back to this a little bit, but basically what we would like to provide you guys with is a funding journey that you can use in your work. And you can use it whether you are a potential founder, you can use it whether you are seasoned founder, maybe you're doing your first or your second startup, or you can also use it if you're an accelerator, incubator, business school, faculty. I have a lot of faculty members that are teaching this in the classroom, etc. So we're providing you with a step-by-step journey map. Now, for those of you that are in the Miro board, you'll also find that we've placed some guidebooks that go a little bit deeper, and we've placed some more advanced material on the bottom. And again, introducing you, and then you can use this as you wish as we progress. Last thing I'm just going to show you here, high level, is we have now taken this funding journey and we've used it with accelerators, incubators, innovation clusters, government agencies, business schools, a lot of founders, also the fund that I'm running. And it really works. It's really fascinating to see kind of what happens, but also what the challenges are. I'm going to highlight some of those challenges. And then afterwards, we're going to see if we can get my good friend Nir on here as well. Now, the first challenge is this. Most founders start with the deck. So they start here and they say, yeah, we're gonna develop our pitch deck. And they think the starting point is the pitch deck. It is not. You need to have good pitch decks in the multiple, but that should not be the starting point. If that's the starting point, you're starting from the wrong angle. What we recommend is this. Number one, figure out who is going to be on your team. Should you do this yourself? Is it the founder, founders, board members, advisors? Are you going to use a specialist? Are you going to use a consultant? Are you going to use an investment bank? What does that look like? Second, start building your investor database. Start looking at other deals. Start looking at news from your ecosystem. Start capturing and put what we suggest between 200 and 1,000 investor prospects. It sounds like a lot, but anyone here on this call can download a list of 1,000 investors in 5 minutes. Not easy, not difficult. The difficult part is finding the right ones. So you can have 10,000, but how do you get to the right 10? That's the challenge. Once you've done this, that should lead you into identifying the top 100 top 100 lead prospects. Now you know who your customers are. Now you know who your investor prospects are. Now you know how your buyers are. And that influences your strategy and your pitch deck. So starting from this point, it's almost like doing the lean startup, but on your investors. Then you go through and you develop your materials, and then you actually go out. So when you go fundraising, and this is incredibly challenging. It's, again, I use the phrase, a double gold medals in the Olympics. You want to target 25 investor meetings per week. And you do that over a series of weeks, typically 6 to 8 weeks, gets you a couple of 100 meetings, but it gets you the momentum and the speed that you need to get this done. If you can't, if you have, let's say you have 40 meetings. I mean, 40 meetings is a lot of meetings. If you have 40 meetings and then boom, you don't have any more prospects, you don't have any more names on the list, you're going to run out of juice. And you now need to go back to prospecting while you should be charging ahead forward. So that's really, really the key. Now, as you work through this, again, the goal here is always to receive and negotiate on 5 term sheets. Super difficult. We are seeing it done. I have one of our startups. They are raising 30 million euro. They had about 70 investors in their data room. They had about 15 that were giving preliminary term sheets, and they're kind of working through, but it takes a crazy amount of work to get to that level. Now, as you work through this, you also need to have some backup options, like what do we do if there's a delay? What do we do if it doesn't work? And then voila, you work through this and you will receive financing and immediately prepare for the next round. Now, when we work with startups in this, it typically takes about a month of work from us before they really get it. So I recognize that introducing all of this in very short amount of time, it can be, maybe a bit of a challenge. But again, I want to provide all this material to you so you can start applying it for your company. Now, I'm going to check out, we have a couple of comments here in the Q&A, so thank you, and this is great, super. Now we're going to see if we're able to sort of switch over. So Oksana, are we able to bring my good friend Nir on? I mean, he's going to give a case study on some of this.
He is already in here, and welcome, Nir. We're happy to welcome you here. Please join us.
Thank you very much, Oksana. Thank you, Chris. And let me please share my screen. I will start with just a second, I'll share it.
And just while Nir is pulling up the screen. So the reason I wanted to sort of introduce Nir to all of you is we've had the pleasure of working together now for a couple of years, and he is one of the best in the world in kind of applying this method in practice with his startups. And he's working with startups in many different parts of the world. But what he's going to show us is sort of how he's doing this in practice. And I think this is a super story here for all of us to learn from.
Yeah, right. Do you see my screen?
Yes, we do. Dream big.
Great. So I would start, I think the best start here is by saying you must think big. I'm going to talk about boldness. I'm going to speak about being courageous and move forward. And why do I say that? Because in order to be a unicorn at the end, be a very, very successful company, you need to have two ingredients. One is to have a very strong forward-thinking vision, and you must do everything with a superb execution. Now, what I think, and I'm coming from Israel, and Israel has quite a few unicorns. I see executors all over the world, and I see people with great idea all over the world. What usually differs people from one another is if they have a strong vision ahead. And let me introduce you, just before we dive into the tools, etc. Let me introduce you Avishai Avrahami. And to those of you who don't know Avishai, he's the founder of Wix, Wix.com. Now, back in 2006, he thought why everyone can, build their own website easily, like a drag and drop. And today it's we're dropping a bit in the market cap, but you can see that in 2021 they reached a 20 billion company valuation. So a company from Israel, 9 million population, much lower than, for example, Ukraine, headquartered in Tel Aviv, succeeded to grow into a global and 20 billion valuation company. Okay, this is their headquarters in Israel. They are now building a new one. And the reason I'm showing you this is because you have to dream big and be professional in what you do in order to succeed in doing so. Okay, and this can contribute a lot to your ecosystem in general. But I think what we should deep dive into, or maybe start with, is what Chris just showed you. And we are now on the Miro board that is basically a working space with a company called Engard. Now, Engard, let me show you something. Engard was basically an idea of two Mossad members. If you know the Israeli intelligence forces called Mossad, they are dealing with, let's say, countering threats from abroad to Israel, and Israel has some enemies also. So they think about two psychologists thought about how can we spot if people are becoming a risk to us, okay? and they thought about technology on that, and they thought who might be the good buyers for such technology. And what they found out that let me scroll back a bit, sorry about that. Yeah, so what they found out that in enterprises, okay, in companies, a single employee that does damage because he is, I don't know, he's not satisfied anymore, or bad hires, or etc., is about $65,000 per one act. Okay, that creates a huge market of 50 billion. Okay, so they have a big market to penetrate. They solve the solution, so it's a technology that predicts and assess people by their having some counterproductive traits and other metrics that show not only when you hire the people, but also when during their work, if something has changed in their attitude towards the company. So this is just the context on this specific company. And as many SaaS company at around seed stage, they are running out of cash and they need to raise money. So they tried alone, not so structural. They met a few from the networks and maybe people that they got them introduced to investors, but they couldn't execute. And then they reached out to me, to us. And as you can see, again, we started with this is the real working space of the working with Guard. So again, started with a noob and pro, and right away I outlined them the process as Chris just showed you. And let me show you what it means to work on this with a single startup. So for example, the first thing we should do is to understand the industry trends, to map out enough investors, and to analyze comparative cases, meaning same or maybe not the same relevant deals or investment in company that relates to us. So this was the first task of this of the founder. And as you can see here, they placed some analytical work on the industry trend. They mapped out mapping, but they map out investors in general, like many, I won't get into it right now because it's a long list. You see how they shortlist it in a minute. And also a deep analysis of mapping, not analysis just yet, of similar relevant seed A, pre-seed companies and the amount that they raised. And as you can see, they started by mapping, and then we looked more deeply into specific relevant companies in it. And from that benchmark, they decided that more or less 3.5 or 3 million would be the right seed round amount. Okay, again, very high level, very initial work, very initial preliminary analysis. Now, the second thing is to really build the investor mapping. So just to show you, by the way, the tools that they kind of replicated is this tool. Okay, it's clean now, but you saw the Excel back then, and what it really shows is that you kind of outline. Let me bring this. No. You start by searching for a company, then you see when it's founded, the headcount, etc. And what's important here is how much they raised in the specific round, and what were the lead investors, etc. So lots of analytical work here. But then you saw the different investors that are relevant. Now, once you do that, sorry, just a second. Once you do that, you need to have segmentation, because you find, as you saw before, 200, maybe 300 investors or cases. Okay, I jumped a little bit now for investment analysis. And what you see now is basically a tool that help you to segment different investors. Okay, how would you segment it? For example, you have two axes here. One, the x-axis is about how strategic is this investor for us? And the second axis, the y-axis, is what is his financial capability? And as you can see here, again, work in progress, the founders deep dive and analyze each and every sticky note here is a different investor, and they are segmented, as you can see, with four domains. One is what we call the flaming fame, usually their inner circle network or people that believes in them, etc., they know of, and not that strong of investors, okay, because again, they're not that strategic fit to them, and the financial capability is not that high. That's why they are located here. Next to them is the group of great friends, which are entities that do have some more strategic related. And when I'm saying strategic, it means that these players, these investors are acting in the domain. They know the vertical, they know the market, they know talents from this market, etc. And they can help us open doors or push us forwards or connect us to the relevant people. And then when investors become more and more strategic, you see not that high, again, more into the right side, but not that high, but they are good friends. The third type are rich uncles. So these are, for example, real estate companies or you know, company or people that can write you big checks, okay? But their ability to help you is not that high, and that's why they are on that quadrant. What they really looking for, and see how deep is their analysis, and this, let me tell you, this it takes time to get into this detailing, okay? All of these that you can see here, and if you can see, there are two different coloring here, so the upper ones are better than the others, okay, or more relevant and have more financial capability than the others. All of these are relevant ones to look for and to engage with, okay? And this is the great segmentation tools. Once you get these 200, 300, 400 potential at the beginning, this is a great tool for you to manage and segment investors. This is segmentation. Another key tool that Chris showed before, and I find it always a super tool, is the Starship Canvas or the Rocket Canvas. And again, as Chris showed before, you basically start with defining the stages ahead. So we are currently in the seed round, or Engard is in the seed round, then A series and B series. And basically you can see here that they build out what do they want to achieve by then. So for example, in targets for the company. So for example, the number of clients and product wise and how much ARR, okay, how much income do they get? What do they have to do in order to reach these targets? And then if they get it, how much money do they need to raise? Okay, so for example, currently they're doing 20K ARR. Okay, they want to reach in a year to 3 point something ARR, which is quite ambitious goal here. But in order to get there, they need to have 3.5 million, which is correlated with the analysis and the mapping and comparable cases that they did before. Okay, in what amount of pre-money evaluation, etc., etc. And this should get them in 18 months. Sorry, not 1 year, 18 months. Okay, and they do that for 3 rounds. And why do they do that for 3 rounds? Because the investors that will look at your projections ahead, they're going to do this analysis for themselves. So you're helping them kind of understanding better if you are fit for them. And I remind you that professional investors have their own obligations for their investors that they are running their money for. So you need to be able to do these calculations, and this tool is very efficient in reflecting where you're heading to. So roadmap is combined with milestones, capital, and timeline all together. This is a great tool. Once you understand, for example, that you need to raise 3.5 million, okay, one of the key elements is to get the founder really understand how they should discuss and leverage the discussion on the valuation of the company. Because most of the time when founders come into to a meeting with investors, the investors usually have the power equation, which is another thing we're dealing with. But you need to control the discussion, especially when it comes to valuation. One thing about discussing valuation is between pre-money and post-money. You want to anchor, to set it on pre-money always. This is one tip. And the second thing is this. So most of the startups, if we're talking about noobs versus pros, so most of the startup these historical or budget forecasts. So budgeting is kind of a noob way of deciding how much money do you need. So let's say your expectation is to grow in a certain rate, and you need 2 million for based on your projection ahead. So if you do that, okay, and you only charge or ask for 2 million, that's good, but it's not a best acting. It won't take you to be, a big company, unicorn company, pushing ahead forward. You need this capital. So in order to do that, even these two options, meaning how much money do I need and how much equity I would like to give up for, so dilution in a way. This is also, all of these are more of a noob way of asking your ask, or the amount you want to raise. What's better is to move the discussion about the market opportunity. So how big is this market, and how am I going to take a big chunk out of it? It changes the valuation. All of a sudden, it doesn't necessarily mean how much money do I really need to get into 18 months or so to get to the milestone, but the potential is so huge and the investor believes in me, and that's why it's better that I have more money in order to get where I want to be much, or even further, much faster, okay? This is one thing. Second thing, if you do the comparable cases we saw before, and already all of a sudden you see that in your specific market, or the companies that you are compare yourself to or are relevant to you are actually raising higher seed rounds in other verticals, other domains, it should tell you something. Because once you're in the meeting, you want to be strong enough to say, look, our projections are at, let's say, 3 million, okay? But we see all of our competitors, all of our players in the domain, they raised 7 million in our seed round, because the market, we can take a big chunk of it, and we should get that. And you can solidify your ask by comparing yourself to the others. And the more advanced ones, which we're not going to deep dive now, is what is my exit potential? So you need to do exit analysis. And also, am I strategic to someone else? And this is why my value would be higher. Because if they buy us, okay, or invest in us, because they're going to get much, much more out of it, this is what we call a strategic value. So I talked a lot about a lot of things here. I want to show you a few more things. All right. I talked a little bit about power equation. When you step into a meeting we start with investors, you know, you don't want to get in like what you see in television in Dungeon Den or these commercial TV shows, because this is not the way it is. The way it is, you should sit down with the investors one-on-one or maybe one-on-few, and you want to be as equal as you can, because if you think about it thoroughly enough, you want to raise money, but they need to deploy their money quickly and push it and on the right investment. So if you are a good investment, they want to invest in you even more that you want to get money out of them. I know it sounds crazy, but that's the way it is. Now, but at the beginning, if you won't act like this, the power equation will always be that they are on a higher level. That's why you need to prepare yourself to think about which questions are relevant to these specific investors, not one that you can learn outside, like, you know, searching in the website or seeing some articles and understand about the investor. So for example, for me, investment strategy in a way is something that you can most of the time learn from the website, for example, or from articles, okay? But for example, how do you see the market for this specific industry, okay? How do you see the outlook? How would you, what does your typical due diligence process look like? Do you take lead or need others to take the lead? And there are many, you see, we grouped some 25 questions, we have more, but we grouped 25 questions that by understanding which are the good questions and the bad question, you should be able to at least equalize the power equation during the meeting. So this is a very good discussion. And one more thing I want to show you is this. And for example, Engard really showed, really wants to understand, and again, this is work in progress, but it can tell you a little. I'll walk you through, and we're going to move into the Q&A section. But basically, you want to map out the exit landscape. And what we have here is a great tool that by analyzing, for example, what are the top 5 exits in your domain. Domain could be geographic domain, or it could be your domain as the subject or the vertical that you are working at. So for example, what do we see here? We see like 3 companies. I mean, talking about on Engard. So they see 3 companies that exited. Most of them exited in M&A, but it could be IPO or SPAC. Sometimes people can write early M&A, so low valuation or high valuation. You see the valuation are pretty high, okay? The multiples are usually the amount of money that people invested, how much they managed to get out of the deal. So you see pretty nice X's in the end, okay? Who are the buyers and the advisor of this company? So you kind of mapping out the exit, and that help you kind of populating the strategy ahead. And that's what we usually do here below. Chris, what do you say? Are we ready for a Q&A?
Nir, I think you're showing this perfectly, and I think it's really important to emphasize again that what Nir is sharing here is a live case with real founders and real data, and there's no way around it. It is a lot of work, but I think this funding journey allows you to understand what are the steps, what are the phases, and what are the key things that we need to do. And we have now seen again and again, what are the impacts, what are the effects by following this process, and it works. So my wish for all of you guys is you start looking at this for accelerators, for business school, for education, for incubators, or for using in your own companies. And it can be overwhelming. So you can start with, well, you know, the low-hanging fruits, but then you build your experience, and after a while you realize, wow, we are suddenly much more advanced or much more mature when it comes to fundraising. And that's what we have right here. We will also send this out to you by PowerPoint, so you can access it at your own pace. But please, let's see if we have any questions, any comments, any input. Let's see how we can help.
Well, thank you so much, Christian and Nur, for your wonderful presentation and for answering many questions in Q&A line. So, as you answered many of them, I would like to voice two that are left without the answer. The first one is, what should a pharmaceutical company that is, besides continuing to develop medicine, interest in strengthening healthcare in more preventive ways, for example, in relation to nutrition and or movement sports do? How should they approach the challenge?
Yeah, so I can take first jab at that. So Frank, when you ask for a pharmaceutical company, I'm going to assume that it is an existing, you know, medium-sized or maybe even relatively large company. So if I can make that assumption, this would be a part of their innovation strategy. So you have a company that has a, let's call it going concern. They have a core business, pharmaceuticals, and then now they want to develop more things into, for example, medicine. So we now have the innovation strategy that we call build, buy, partner, co-invest, or co-develop. And it basically means you have 5 options. Option number 1, we want to develop this ourselves. We want to build it. We will build it. We have the people and the talent to build this ourselves. It's what we call internal or closed innovation. The second is, well, we buy it. We don't have the people, but we have a lot of money, so we can buy through acquisition. That's being done a lot within the medical sciences space, and it's a very common way of growing. But then you have partner. So you partner with relevant companies and you do something together where none of you could do this by yourself. But then we have the more interesting ones. One is co-invest. So we're now co-investing into startups. So maybe you want to set up a corporate venture fund. Maybe you want to do some early stage venture funds, but you're putting money into it with a startup investment lens. And then finally, you have co-develop, which means, could we build some accelerator programs around this? Could we do an innovation cluster around this? But we try more open innovation methods. So that's how we would approach it, choosing amongst the build, buy, partner, co-invest, and co-develop.
I have a kind of similar question. You gave your advice to pharmaceutical company. Are those advice, is your advice applicable to pharma business, or it could be applied to any other technologies? Because you mostly talked about IT or technology companies, but the biotech sector is growing rapidly, and for Ukraine it is very important because agriculture, as you know, might know, is one of our main economic drivers. Can you talk about this, please?
Absolutely, and I'll be happy to. I'm just posting a link on Frank's question. So you can apply the same framework or the same lens for any company in any industry. And the basic question is, if we have an established company and we want to do innovation, we want to grow, how do we best grow? And again, we come back with, we build it ourselves, we buy it, we partner with others, we co-invest with others, or we co-develop it with others. So we're moving from internal closed innovation and much more over to external open innovation in practice.
Muted.
Sorry, you're muted.
Sorry, gentlemen. So there is a question, what are the successful examples of Ukrainian startups and what did they really do well? If you have any knowledge of Ukrainian startup scenes.
Mir, I'm coming up blank with any specific names. Do you have any? No. So I think this is
what I was. I'm sorry about that. So one of the things we've learned. So again, not a Ukraine-founded companies, but what we found out pretty at the start of the recent war is that, for example, Wix had about 25 or 30% of his employees coming from Ukraine. Okay, the remote work with Ukraine is when the war started, then things become more clear about how Ukraine played a great role within this entrepreneurial world, and I say global. And what I suggest everyone here, okay, I'm taking your question a little bit to a different direction. What I suggest here is, now some of the workers, didn't find, stop to work, need to find new work, etc., etc. Usually these times are great times to open your own companies, okay, your own engagement, with the knowledge that you gained from companies like Wix, for example, or others that succeeded. Could be a great, so what you've learned in these companies can help you build your own companies, Ukrainian companies, and lift it up forward. So about successful, I'm sure there are successful startups to note. This is not my domain, but what I want you to take out of this is this boldness and courageous and do things. Take this opportunity and look at it as an opportunity to create new companies and uplift the ones that you just started with a global mind.
Thank you so much. It was a wonderful advice and very timely, because I strongly believe that it is high time to develop the entrepreneurial landscape and start the companies, welcome all the investors. We have pavements of gold, which are ready will be ready for the development soon, or is already ready. And with that, I would like to thank you for the wonderful and very technical, very detailed presentations that you gave us. Thank you so much. It was wonderful presentation and wonderful discussion. And many thanks to the attendees who came and who asked questions. Thank you for your questions and the great answers. The recording will be there for you. Hope you will view it in a more favorable conditions. The recording will be available at Rainforce UA website. And I'd like to let you know that our next event will start in a week. Next Wednesday at 6 p.m. Kyiv time. And our speakers need no introduction. We are going to have Philip Kotler and his business and research partner, Christian Sarkar, who are classics of marketing, who shaped our understanding of marketing for many of us. We are looking forward to see you there, meeting you in a week time. We shall win. Slava Ukraini. Goodbye.
The war in Ukraine has changed the world, and now we need to think about where this world is moving to, together. That's why MIM Business School is launching the nationwide educational project Reinforce UA, where the world's greatest minds will share their ideas and insights. And you will get their experience, change your perspective, and discover what changes should the business be ready for, before and after the victory. Every week on rainforceua.com.